Welcome to Smart Stock Watch, your go-to channel for in-depth financial analysis. Today is March 21st, 2025, and we're diving into the latest earnings report from Sunlands Technology Group, a leader in China's adult online education market. Joining us is John, senior analyst from Smart Stock Watch. John, thanks for being here.
Thank you for having me. Sunlands has just released their unaudited financial results for the fourth quarter and full year of 2024, and there's a lot to unpack, from revenue figures to strategic insights.
Revenue and profitability overview. Let's start with the top line. Sunlands reported a net revenue of $66.2 million for the fourth quarter of 2024, which is a 10.8% decrease compared to the same period last year. John, can you elaborate on this?
Absolutely. The decline in net revenue was primarily driven by a decrease in gross billings from post-secondary courses. However, it's worth noting that the company managed to offset some of this decline with growth in revenues from sales of goods like books and learning materials. For the full year, net revenue was $272.7 million, down 7.8% from 2023.
And what about profitability?
Gross profit for the fourth quarter was $55 million, down from $468 million in the previous year. Net income also saw a significant drop to $7.9 million from $155.2 million in Q4 2023. The net income margin decreased to 12.0% from 28.6% last year.
Operational efficiencies and future outlook. Despite the revenue decline, Sunlands reported an increase in new student enrollments. What does this indicate about their operational strategy?
Indeed, new student enrollments for Q4 were 172,200, up from 164,654 in the same quarter last year. For the full year, enrollments reached a record 674,649. This growth underscores Sunlands' ability to expand its market presence and attract more students, which is crucial for long-term sustainability.
What about their future outlook?
Sunlands expects Q1 2025 net revenues to be between $470 million and $490 million, indicating a potential year-over-year decrease. However, their focus on expanding course offerings and improving service quality positions them well for future growth.
Cost management and strategic initiatives. Let's talk about cost management. How has Sunlands managed its operating expenses?
In Q4, operating expenses were $48.1 million, a slight increase from last year. Sales and marketing expenses rose by 3.0%, reflecting increased spending on branding and marketing activities. However, general and administrative expenses decreased by 9.9%, and product development expenses saw a significant reduction of 41.2%, mainly due to headcount reductions.
What strategic initiatives are they focusing on?
Sunlands is concentrating on sustainable growth and operational efficiency. They are leveraging interest-based courses as a core growth point, aligning with economic and demographic trends, which should help them capitalize on future opportunities.
And CFO insights. What insights did the company's leadership provide in this report?
CEO Tongbo Liu emphasized their student-centric approach and the importance of adapting to market demands to sustain long-term growth. CFO Hongyu Li highlighted their focus on sustainable growth, operational efficiency, and cost optimization. They also reported healthy growth in operating cash flow and financial resilience.
And what about their share repurchase program?
Sunlands extended their share repurchase program, having repurchased approximately $3.9 million worth of shares. This move reflects confidence in their financial stability and commitment to returning value to shareholders.
Key takeaways. In summary, Sunlands Technology Group faced some challenges with declining revenues and profitability, but their strategic focus on student enrollments and operational efficiencies shows promise for future growth. John, any final thoughts?
Sunlands is navigating a competitive market with a clear strategy. Their record new enrollments and focus on interest-based courses are positive indicators. However, investors should watch their revenue trends closely in the coming quarters.
Thank you, John, for your insights. And thank you to our viewers for tuning in. If you found this analysis helpful, please like, share, and subscribe to Smart Stock Watch. We'd love to hear your thoughts on Sunland's performance in the comments below.